The ranking member of the subcommittee, the gentleman from Illinois, Dr. Foster, is now recognized for 5 minutes.
Thank you, Mr. Chairman. We've talked repeatedly about sort of the two main factors that are driving both consolidation and discouraging de novo entities. You know, those are regulatory compliance costs, which are part of it, but also the digital economies of scale, which I think are really the most fundamental one. In Mr. Knight's testimony, he referenced the BB&T and SunTrust merger, and the article that you linked to in your testimony was exactly on point. And that you know, this was a merger driven by the need, or at least the perceived need, to compete in the high tech, you know, to provide state-of-the-art apps and user interfaces for people, which is not cheap and is not realistically going to be done by every little individual community bank. And so I wonder if the witnesses could just weigh in on how we answer, particularly the second one of those. How do we answer the digital economies of scale? That I guess, Mr. Reuter, you must be right on the edge of being able to do that all in-house. I don't know if you contract it out, but how do you handle that? And how do you avoid this continuing to drive merging and drive the small players out of business?
It is an extreme challenge for the industry. Technology is very important. Technology is also getting cheaper over time, though, I would tell you that, and you can find fintech partners to help lower the lift, but it goes without saying that the cost of investing in technology is a big challenge for community banks.
Any other comments on this? When I look around at areas of potential bipartisan agreement, I guess I've mentioned the concept of multi-level preemption. So instead of having 50 different standards, you might have a small handful, each one representing 20% of the U.S. population or something like that. It seems like that's somewhere that we could all end up happy. So those who agreed with the California approach to something could say, okay, those states will join California in one consortium. Others who maybe want to join Louisiana or something like that may come to a different set of standards. And I think that's something we should investigate on a bipartisan basis, as a way out of the conundrum there. Another area is that of secure digital ID. I was very struck by, during the COVID crisis, of seeing an estimate of roughly $400 as the cost of onboarding a new customer. And I see some nodding that it's somewhere in that range. And so the technology that exists in many countries and ought to exist here is simply the ability of a consumer to, get out their cell phone, show it your thumbprint or your face, so you're registered with your cell phone, and then use that to present your Real ID compliant digital driver's license or something, and that way authenticate yourself as a single legally traceable human. And that, along with an appropriate, whitelist or blacklist of bad players, would allow, an emerging fintech, for example, to very quickly establish a way of onboarding customers at much lower cost. Avoid the identity fraud, which is a scourge and a source of huge cost for consumers, for businesses, and for government. We got actually very close to getting a big step forward. Actually in the omnibus bill with bipartisan and bicameral elements and support, but that's something where I think we have to get that across the finish line, because it is unnecessary and falls most severely on low-income people who actually don't have an established credit history and everything else. But if you have a secure way of proving you are who you say you are online, is something that will have huge benefits across the board, and particularly to the smallest players and to startups. So that's something that we had a very nice colloquy about that with Representative Hill on our organizing session. And so I was wondering if any of you have comments on the way to go. I guess if any of you operate or are familiar with what happens internationally, where that is something that's being provided. Any comments on the way? Yeah.
That the new, that's something where an area of a new bank that, or a de novo bank that would have expertise on certain technologies such as blockchain might very well come in handy, or can help fill the void. It's not just technology is costly, and it may seem on the surface that larger banks may be more the ones to handle it, but a smaller bank or a new bank with expertise in a certain type of technology may, add something crucial to data protection, and that's in some contexts.
Thank you. Yield back.